Good morning, everybody. It's 8:40 a.m. Pacific Standard Time. Merry Christmas and Santa Claus be with you. It is 12/19/2012. What do we have before us? Google. What is the topic and the subject and the training line? Is how to get the lowest entry on the 730 put, which is in the money, based on the fact of using the MMT platform. And the topic here is with using the MMT platform, we have an IR that's at 85 and higher. This 13 is the intraday high. It's identifying the opening 2-hour bell that when we opened, we put a bottom, we spiked to that high. Then we had a reversal here to this teeny line. And each one of these lines today is worth a 16th, and they're 88 cents a line. And we're at 92 intraday range, and we're 12, and that equals the movement in the stock based on our mathematical program in price. And it's called high frequency trading technologies and software programs that people use in the exchange model on ECNs. We've identified that if we look right here at Google, we are making higher highs right now. The put contracts that we traded earlier and made profits on were now have a $2.80 range, and this is a $730 put. And basically, when we hit the wall of resistances, we have bids down here at 820 and 770, and we have a couple of contracts we're trying to scale into. $12.10 the high. The only way that we're going to be able to gauge the entry in those options is understanding one thing. Right here in the video, this is the long-term consolidation. It's 4 teenies at 88 cents a teeny line. In our system, he will pop it, the probability of popping it higher, and dropping the lower entry over here to wholesale based on that resistance level. Right now, he's having a hard time doing it. 930 is the low of the day in the range, and 1040 was a close. And we have we have a few contracts out there at 870, 820, and 770. And we have had them out there based on this morning teeny range, which is 4 teenies up and down. So I go up 1, 2, 3, 4 teenies at 88 cents a line, and I come down 4 teenies at 88 cents per line. That's round trip. Then I come back up the same 4 teenies right here. If he pops it up in a high frequency buy program, that is a machine that does it, then it would drop us down to those lower price levels on entry based on that resistance. Right now, we are getting a small reversal from this range. This range is the opening bell range. The IR has dropped in value. That's why the candle came down. This here dropped to 5. It was just at 12. And when it dropped down to 5, that's why we dropped 1 teeny at 88 cents right here. And it's that accurate. Each line is 88 cents, and this is how accurate this platform is. Then it's identifying the ratio ascending value or descending value. We made it simple for you. You have no other way to operate in these markets with high-frequency algorithmic trading software and technologies that are in the market today. You will be washed out of the market, or you will come back here and you will get involved with me, and you will get involved in beating these high-frequency algorithmic machines that have buy scripts and sell scripts. We can clearly see here that we had a reversal from those highs. This is that range. It's a 2-hour range. And it is a mathematical range that is used in the bid and ask. And what is the bid and ask? It's this right here. Bid and ask. Goes up, goes down, goes up, and goes down. So what I'm going to tell people right now, we are at a 61 IR. The lower this goes, that's why you're going to drop 1, 2 teenies right here at 88 cents a teeny. This is how accurate this is. This does not lie. This is populated before the opening bell. This is the only way that you're ever going to exist in the markets, is by having your own set of tools that follow the high frequency buy and sell tape that is used with they're out, they're algos, but they're in a software program, and it's all about how it interacts right in here. And we can clearly see that the put option now is at 990 by 1040 again, right back to the close of the 730 put, based on the intraday movement, morning movement of Google being open 2 hours and 45 minutes in prices. This is how the put options actually go up and down in value. They didn't hit us in our value. Again, he was there at 880 on the bid. And when the reversal comes in, you can see how the value goes higher in the 730 put. Once again, it's using the platform, and it will be foreign to you at first. But remember, the video is done for our MMTs, but it's also done for you to take the next step and come here and find out more. We're not wrong. This is how accurate it is. 1 teeny, 2 teenies, right to the penny. And there is that diamond. That diamond represents the high-frequency robot that's in the bid and ask in the NYSE, the NASDAQ Composite, and the Amex, and all options exchange pits as well. And this is our only way of monitoring them. There is no other way. Standard technical analysis doesn't work anymore. And these are program scripts that happen in the name, and we're also in a holiday session. So once again, you can see right here, the 730 put is 970 by 1020, and you can see on the MMT platform on Google that Google is in a 4 teeny range, and we're taken from this low to that range, back to that low, back to this range, and it is mathematically so accurate to the penny. You can see the tops here at the teeny line for the viewers viewing the video. This is not fake. This is real. This is how accurate it is. It does not lag the price. Here's my promise to you. You use what I do to track these trading software programs in the exchange model. Mathematically, when this was up here at 14, we just dropped to 4. That's why we came down 1, 2 teenies of the 4 teeny, 2.5 hour going into 2.5 hours of this morning consolidation. Mathematically, it's just we are that accurate, and we have them pegged that accurate right here in this video. Nobody can deny the accuracy of 88 cents a line and dropping 1 line, 2 lines, which equals 2 teenies. And in this case, we are down here. We could go down in these negative delta ranges, just as we went to the high end of 729. When I told people we were going to hit 729 yesterday and we were going to have a reversal, I meant that. And we did. So there is a lot to this application, but it is accurate. We use it and apply it to both our wholesale entries. We have the strike price. This particular strike price is on the put side of the market. It's a 730 put. It's in the money. Even though Google's trading at 721.59 and has a very narrow intraday morning range of $4.20. This is going to open up later in the day, MMTs. And the reason why we do this live right now, and the reason why we do the training on high frequency trading software technologies that you can't keep up with, Mr. Public Trader, because you don't have a way to peg their system. We do. Therefore, getting entries on the equities, going up in value and shorting and going down in value, buying the contracts that are put options that represent a wholesale price based on this consolidation, because if we pop up, we just seen that the contract was 880 on the bid. Now it's 980. But we are in a Christmas time period, and just the opposite, so you know, we're trying to buy the $715 call right here in this video. I've got bids out at $3.70, and the time is 8:49 a.m. Pacific Standard Time. I'm out here to buy this 710 call live in the market here today, where it was 1360 on the high, 1050 on the low, and 1220 on the close. And I've got bids. I would love to buy this. If we drop down and the high frequency sells the name down and the bids disappear, and we drop down lower and make a series of intraday lows, that is my wholesale price on the 710 call here and now at 8:50 a.m. And that's the call structure. The put side is that I'm trading based on resistance. I'm trading the 730 put that's in the money, and the premiums are not moving. We are experts in this option pit because we have the high turbo option frequency. What does frequency mean? It means that the options will never be the same that they ever were. They're never going to be. They are pegged mathematically as well. And people that have been trading options and doing stuff and how they steal the premium mathematically is one set of the equation. The other set of the equation is the price movement of this equity and how these are going to make the move based on these scenarios that we have set up today. We can't lose. If we get hit on the calls, we make a great deal of money. If this pops up out of the consolidation range here in the chart and we get hit on the puts on the lower end, we make a lot of money. We are in a win-win situation. And this is how you take advantage of high-frequency trading components within these ECNs in here. These are not in your control. They're way out of your control. The day trader has not been given a fair opportunity, but we're here to provide you that fair opportunity that you're not going to get. And either you will get in our high-frequency trading program. If you don't do it now, you will either do it later or you won't have any more money to trade with in the markets because you'll be washed out.